Hello, team. I just wanted to kind of go do a little quick review here about the tickets that we went over and what was guided and what was I guess potentially given to you guys to profit from, and also to learn from it based on action of how it was alerted, how we went. So we got three ones for it that I want to go over, just to make the video short, not too long. And we have Mdvl and we have MF and HL. First thing first, let's talk about their floats and volume. Float difference. Let's go back here. Mdvl has a 32 million floats, MF 200 mil floats, and 600 almost let's say 500 mil float. You can tell that's the huge difference between each other, right? So based on that, you're gonna have to understand range. The lower the float, the bigger the range in price, or how much is going to run in range. One thing sure is volume matters also. For example, if we were to run 32 million floats, and remember volume is 100, like 200 million, that could move dollars. If FMF is 200 million floats and he only has this much, it's only going to probably run 40 cents, 60 cents, 80 cents. If the same volume of 200 million volume runs on this one, it's going to run only like 20, 40 cents. And because why? You have to make sure that the volume is even so much higher than the float to make it move dollars, just because, based on the demand. And the bigger the volume is with the lower flow, expect, $2, $3, $5 movements when it squeezes up because it's such a low flow. Even, creating halts going up and coming down whenever the selling pressure also happens. So let's go back to MDL, and that's something I wanted to go real quick. It's just based on volume and flow. Remember, flow is just how much or how many shares is pretty much given to us, the public, to trade with. And then you have market cap. Higher market cap means, that's how much, I guess, based on if it has options or not. Also, the bigger the cap, most likely has option because just it needs so much action or so much pressure to even move the ticker in demand. So or it can take even longer to move certain range throughout the weeks and months. So let's talk about MDO. That I wanted to, like I say, make this about 10-15 minutes video, and we're gonna talk MDO. What was it called and what was the reason being that it was alerted? So we're gonna go back here the day that it was alerted at action. And that was, this action. I took out some support and resistance just for the reason that I wanted to kind of put it back in so I can show you guys how, I come up with the plans of potential. So based on this, MDL started, it ran a pre-market high of 160. And then I was noticing that it was trying to have build intentions because, intentions are built by holds and running higher highs. So when the B was ran here, it's kind of like an ABC action to me. But, even though he already had a high prior, I guess, after hours. So when he started building his intentions, I really didn't see the action, really. That's not what attracted me. What attracted me was the 4 hours. We had a 4 hours here that was at this peak, and then it had like a potential that was curling, and it had this, huge potential to go up. But what caught my attention to me in the most was RSI. RSI did not go to the overbought territory yet, and we saw the FETSO also didn't go back to the to the overbought territory, because if you zoom out, it was around this peak here that it started the 160, and I noticed that it had a lot of potential to run what right here. If you go back, if I were to put the support resistance here, this is why I said that he had the potential to go to 180, because you can notice that it had a 177, and then he had a 166, 163, and then you had this one that was 177, 176. That's a lot of potential for it to run 180, and that's the reason it was called for potential to run 180, because we had a bullish 4 hours. And bullish 4 hours mean that we needed K to stay above D to show potential, not just on this one, but also on JD, because you're going to tell that the gap wasn't that big. And it was coming off weekly potential also by stretching, right? it had a candle that was, yeah, so it wasn't in the gap. It did the run throughout the middle of the week. So that given the reason is that if it were to open Monday at a gap, that would have created the gap on weekly. But since because it did it throughout the week, the same level, I mean, the next candle opened up in the same levels and creating, the potential to keep pushing up by holding the daily gap since it wasn't too huge and pushing even higher by holding even higher gaps because of the weekly. And also because the weekly reason that, it likes to squeeze a lot. You can tell, boom, huge candles. So it had a good potential to squeeze because it was coming off at bounce from K to D. So that was kind of came to intention that it was, based on the holds, it was just all because of the potential and momentum, how momentum was sitting. And also, outside the box thinking based on what you see of knowledge or what you're trying to, kind of predict or what you know. So that's what, brought that idea into that we will be able to keep pushing higher into the over 180. Was I expecting 250? No, I was not expecting 250. I was only expecting 180 and higher. And then eventually, the hold came in, and then the hold pushed even 4 more up the next day. Because pre-market, or I think it's after hours when he tested. Oh no, after hours he tested the 240. Next day running 240 again. So that's that. And then let's go back now to we're gonna talk about MF. Let's go back to MF. And you're gonna talk about MF. It's just pretty much the same thing. What I liked about MF was the 4 hours uptrend that we had. It was alerted at 138 for 150, runs 180 at the end of the day of the exit too. So after the exit was called, it started dipping and retesting the 150 area. So let's start right here. It was alerted in this area here, right here in this potential. So in this area here was whenever it was alerted. And it was, it was consolidating this potential here. And guess what happened? It just boom went popped and then running into 190. And that, why was this ticker given was because remember, I like to look at the momentum. I like to look at the action, but on bigger time frames, because you can't really depend on lower time frames. It just doesn't work like that. You came with a support and resistance out of here. I like having a range of multiple support lines because, I want an area to be tested or cross or fake or whatever you have to do. I just want to make sure that it gets into that area. And I have in mind thinking that once it tests that area, I'm not expecting more, and then there's potential to pull back under that and lose gain over time. So when this ticker was alerted, it was because what? 4 hours was uptrending. It was in this action right here that was uptrending. And then, it started downtrending later in time. And even almost retested the 180 again. So, before it started downtrending. I like the uptrending, and I like the action of this resistance here. That it was also what? Support before. So if it had potential here, I knew that it could retest that level. And then if we go back to the 1 minute in that action there, it was around here that it was alerted based on that potential was right after market opens. And then if you're going to notice here, we have this support of 132 and we go back to 4 hours. Say support was, built up above the higher high. And then why this matters is because if you go back to 15 minutes here in that action of that time, we were sitting in a nice 15 minutes reset pushing. Also, not just that, but also 30 minutes pushing. It was an uptrend. It was a little confusing, but that's why you don't have to depend on just on one. You have to make sure that you're looking at other time frames, especially time frames that have a better, uptrending. For example, this one, it was, it was messy. One. I'm sure that it was messy. So, how will you be able to tell the potential here? It's just too messy. So you have to go back to when 4 hours was a little more of a better uptrend. And that give the potential to me that it could retest this level before giving up. When it happened too fast because of the squeeze, that gave the idea that I was like, hey, nope, too fast. Let me get out. And I got out then. So exit was alerted at 180. So, look what happened, 139, retesting those same levels again. So that's what you have to think is make sure you know when to exit. Remember the float, it was less. MF only ran about 40 cents, 45 cents. Mdvl ran about a dollar and something. So it's like $1.50. But the float was so much less. And the volume for this one You see how it was real small, 38 million. So that's why the tank happens so quick, because if it's 38 million, then most likely 38 millions are pushing the price and 38 million is about to release it and let the ticket go down. So if you're not following the whale algorithm, then you're gonna go back, or I guess you feel about the potential how it's supposed to be, then you're gonna have a hard time understanding the action. So let's talk about HL. HL was the one that was a little complicated because of what happened. Remember, some actions don't happen because it just happened randomly. You have to keep in mind what's happening or why it's happening. And so we're gonna kind of talk about this one because it was a little complicated, like I said. And why? Market cap is huge, 3 billion, almost 530 million float. That says that he's going to follow the market's condition, SPI. If SPI is tanking, that's going to tank as well. If SPI is pushing, being bullish, that's going to push being bullish as well. So same thing happened, and then that's where they happened. He had the potential, sometimes let's just say action is not going to be just because of action. It's going to be outside thinking. It's going to be as why it's happening outside the box before you can, call out potentials, how you should be handling the next time, or what you expect, I guess, of how you should be handling to get out in profit. And that's where you never put, your whole all your eggs in one basket. You make sure you always diversify, and so you can control those emotions a little better. Always trade what you can afford and what you can afford to risk, especially per trade, not just overall count. Because overall count, that's going to destroy your emotions a lot faster than taking it slow for learning purposes. So when it comes to this, high caps, market cap was huge, float was huge. So it's going to be, remember, being huge can move a lot less in range. So you only move about 45 cents in 3 days. So now we're going to go back to this one, and it's going to be a quick explanation of what happened and when it alerted. It was alerted here. It was building real nice with the buyers, and it was starting to push up that 1715. SPI starts tanking. Oh, where's the potential? It's gone because SPI is tanking. What it follows, the SPI. SPI starts being bullish. What it follows, SPI. So, I was really not just basing on just supporting resistance. I was basing in outside thinking box of SPI, of how it was doing, how, it was potential was pushing. So, long story short is, SPI did got caught. So when it came down to dipping, I never panicked. I actually took it as an opportunity. It was alerted many times. Like, look, I don't even have to put your support and resistance because I already knew what was happening based outside the box thinking. And I even told him, at the end of the day, I'm going to dip a lot heavier at 640. I dipped a lot heavier at the end of the day because it's what volume is. It doesn't like to move a lot through pre-market or after hours at all. So I knew I had to be able to dip before after hours. So long story short is, I came down, I dipped it at 640, and I was 638, 637, and then I was like around there. And then that's when I started dipping. I didn't really dip the 625 because I was like, in case he's just a little lower, I don't want to. So I missed that, so it was fine. But I was already in this area here, dip, and then I brought that average to 668. This action here is what I got me to even add a little more, because this area right here was alerted to more. Why? Because it dipped and it held BWAP. Sometimes you don't even need support and resistance. You just use BWAP for strength. And you use the outside thinking of SPI that it's bullish and it should be bullish the next day. And that's the reason why I knew that this ticket was going to, up a push the next 2 days. So guess what happened? 640, I alerted at this area to keep it on watch that it was going to uptrend. That all I needed was 670 to push the ticker so I can be in good profit, because this is when I added in. I brought my average down to 661, 660, I believe. And guess what I needed it, because I was already a little heavier. I was like, okay, it runs me 50 cents. I should be a nice $600, $800 profit. Runs me 680. And I started, locking a lot at the over 680 area, because, SPI started dipping a little bit, and it was through midday. So I was like, okay, let me just look like it's consolidating a support. It's consolidating a resistance, just by the little U-shape top. So that was like, okay, let me just lock there, and I locked, and then that gave me a nice little profit for the day, especially exiting out from thinking outside the box of SPI's action, and also taking advantage of how candles closes, how the behavior of the ticker is, flow, the volume, the after hours action, the pre-market action, the let's just say the behavior of it. And importantly, this is why I like this ticker. And I knew it was going to come back. Key. Let's go to yearly. I know it's big, but look at the momentum. It's set enough to run this whole year strong. That right there gave me the idea that, okay, this ticker's going to come back. You know, I never alert tickers that are just going to flush us for days and days and days without having the potential to come back eventually or hold supports. That also is important, is to hold risk and hold support, let it consolidate and eventually comes back. You know, because the longer support is, the bigger the chances that it's going to reverse and even run a higher high. So that just, you know, gave me that potential that he was consolidating. And look what the support we had. We had a 450, 458, right, of support. But if you go to quarterly, we had a support of 625 for a month now. No, it actually just updated. So we just, you know, it started uptrending. But long thing is, it had a nice low support right here. Actually, this is where I saw the support 6 weekly. 625, you know, 652, 625. And I was like, okay, we're retesting 625, 630, and we're around that area. But we're definitely coming back under 640, retesting those levels. And I was like, okay, that's a good potential for me to start adding. And then guess what? Look at all these wicks. So I was like, let me just average Lil Harry into the end of the day. Guess what we did? Reverse. And made me exit in a nice little profit. That yeah, you know, it came down to that. So when it comes to situation, always remember, you have to make sure you're thinking outside the box, and you have to make sure that you're looking at all time series and stuff like that, so you can have or find a solution to be able to exit off, you know, an algorithm that, yes, it can become a puzzle, but you have to be able to work out alive. So that's just it for this week, guys. It was just something quick about that I wanted to go over, and then nothing much. I will be making these videos every week, every Saturday, and then they're gonna be posted every Saturday or Sunday. And you know, Sundays we're gonna have meetups, and then from there we're just gonna keep going up. But other than that, team, I guess I'll see you guys Monday, and I'll be in touch with everyone. Peace.